Africa Investor Today is proudly brought to you in association with Petro SA and Afrexim Bank.
Good day and welcome to Africa Investor Today, where we bring you up to date on African business news. We start today with politics and economy. According to the president of the African Development Bank, Africa's gross domestic product is likely to grow by between 5.5 and 6% in 2010 as the continent recovers from the global downturn. Donald Kaberuka also said the bank had suspended programs in Guinea, including a mining project involving Rio Tinto, because of instability in the country, where a ruling military junta is facing international sanctions. In an interview at the AFDB's headquarters in the Tunisian capital, Kaberuka said he was upbeat about the economic outlook for Africa after a year when the continent was hit hard by a drop in demand for commodities and a scarcity of finance. He said the bank had revised up to its GDP growth forecast for 2009 to around 4% from the previous 3.5%, and that is expected to reduce lending in 2010. Angolan President José Eduardo dos Santos acknowledged during a rare public appearance on Monday that despite his country's oil wealth, the majority of Angolans were very poor. Dos Santos was speaking at the opening of the ruling Popular Movement for Liberation of Angola Party Congress, only the second since the end of a 27-year civil war in 2002. The veteran leader, who has ruled Angola for more than 3 decades, urged his party and business leaders to help improve the standard of living of those living in poverty. Dos Santos also referred to the importance of businesses making money, not just for squandering, but also to create investments. Despite Angola's enormous oil and diamond wealth, it has some of the world's worst social indicators, with 1 in 6 children dying before the age of 5 and less than half the population with access to sanitation. This is Africa Invested Today. We'll have more news after this.
Redefining energy means redefining life. At the Petroleum, Oil and Gas Corporation of South Africa, our commitment to greater innovation and greener fuels has made us pioneers in the field of gas-to-liquids technology. It has also earned us worldwide recognition for producing the cleanest fuels through environmentally friendly processes. That's how we've become the international leader in diesel technology. Through pure innovation, pure energy, pure brilliance.
On to companies and markets now. News from Zimbabwe. In what could be considered to be one of the biggest economic empowerment deals this year, the government has given the nod to a consortium of Schweppes workers and management to buy a 51% stake in the company, with the remainder being taken up by Delta Corporation. Most of the regulatory approvals has been granted and the final exchange control approval is expected anytime soon. The Schweppes management and workers formed an investment vehicle through which they acquired the controlling stake in the cordials manufacturing company, with the managers holding 20% of the shares and the workers 31%. The consortium is comprised of 6 senior managers and 400 workers. Schweppes Managing Director Mr. Charles Msipa told Herald Business yesterday that the management and workers at the company were looking forward to a fruitful relationship from the proposed marriage with Delta Corporation, a torchbearer in the beverages sector. SAB Miller said the value of sale of a stake in its South African business to black investors has risen to 7.3 billion rand from an earlier estimate of 7 billion rand after its share price increased. The unit will initially be 8.45% black-owned, with this share in the business rising to 14.1% after 10 years. South Africa is pushing companies to boost black ownership of their businesses to help make up for discrimination during apartheid. SAB Miller employees will get 40% of the stake being sold, while black-owned retailers will get 42%. Stay with us, we'll have more news after this.
Afrexim Bank is Africa's leading trade finance bank, an organization dedicated to promoting African trade through credit, risk-bearing and advisory services. We pride ourselves on having local presence throughout the continent and are committed to extending our award-winning trade and project finance programs to unlock private sector development continent-wide. We invite you to become a part of our vision for a strong Africa in a changing world. If you trade within Africa, contact us to support you.
In banking and finance news today, Blue Financial Services have been involved in talks with some Egyptian companies in a bid to find a partner which would enable it to enter the North African country. But Morne Reinders, the corporate affairs executive at Blue, said this was not a priority at this stage as the company was fixing other things within operations. He said the microfinancier currently wanted to increase group liquidity in the short term and was considering a rights issue to existing shareholders. The company was in ongoing discussions with funders to secure new funding and restructure existing funding lines. Last week, Blue reported significant losses for the 6 months to August, attributing this to funding constraints, increased costs as a result of the Credit U acquisition last year, and a large increase in provisioning levels. Kenya Commercial Bank, Rwanda's customer deposits have grown by 34.5% in the last 9 months from 113 million Rwandan francs to 4.45 billion Rwandan francs, according to the bank's latest quarterly financial report. The bank's total assets in the period under review have gone up by 65% from 6 billion Rwandan francs to 10 billion Rwandan francs. The bank says that the last months have been characterized by heavy investment in building business infrastructure, staffing and training to improve their capacities to manage the business and risk elements of the expanded operations. Over the 9 months of this year, the bank has expanded rapidly from 1 branch at the beginning of the year to 9 branches by the end of September of this year. The bank has also just concluded implementation of a new banking software linking Rwandan customers with its sister banks in the region. We take a short break and back with infrastructure news after this.
Africa Investor, the leading African investment magazine, is essential reading for investors in Africa, filled with the very latest in Pan-African investment and finance news. In addition, log on to africa-investor.com to find out more about our exciting capital market, infrastructure and tourism events, and our long-standing investable Africa Investor 100 Index series, which tracks over $600 billion of African equities. Doing business in Africa, you can't afford to be without Africa Investor.
And finally, in infrastructure news now, Prime Minister of Kenya, Raila Odinga, said that Kenya will launch a major Eurobond issue next year in an attempt to raise funds for the development of infrastructure in the country. During an interview broadcast on Monday, Odinga said they are trying to raise quite a substantial amount of money through these Eurobonds. They are starting first with about $10 million that they are trying to raise. Odinga believes that the infrastructure is the key to connecting the continent to the rest of the world and to development in Africa as a whole. Kenya is East Africa's largest economy and is likely to see growth of 3% for this year, despite very little rains affecting agriculture outputs. The country had previous plans in place last year to sell a Eurobond, but shelved these, citing that the time was not right. COMESA Secretary General Sindiso Ngwenya has said that the region needs about $45 billion annually for both maintenance and capital expenditure of infrastructure projects. And President Banda urged common market for Eastern and Southern Africa member states that have not yet eliminated tariffs from intra-COMESA trade to do so in the shortest possible time. During the official opening of the 27th Council of Ministries meeting at the COMESA Secretariat in Lusaka, Ngwenya said member states were supposed to contribute about $45 billion to finance infrastructure projects annually. South Africa's bold opening move at global climate change talks in Copenhagen, which kicked off yesterday, effectively rules out building a third coal-fired electricity plant. President Jacob Zuma's office, announcing he would travel to Danish capital for the final days of negotiations next week, said on the weekend that South Africa would cut greenhouse gas emissions in 2020 by 34% compared with a business-as-usual scenario, and in 2025 by 42%. The offer is conditional on a fair, ambitious and effective outcome in Copenhagen that includes financial and technical support from the international community, and reiterates the position that the country's absolute emissions will peak and plateau by 2025. Thank you for watching Africa Investor today. For more on African business news, please log on to our website at www.africa-investor.com. From Ease Island, have a great day.
Africa Investor Today is proudly brought to you in association with Petro SA and Afrexim Bank.